Recently, there have been some very clear structures forming, namely the range at the middle of a bearish continuation that lines up well with Fibonacci retracement levels. Similar to the last example, we can base the Fibonacci circles on the same points, and it's no surprise the first area of major resistance is at this intersection. A trend-based Fibonacci time zone can be based on the last trend. So since this is already a defined bearish zone, continued neutral to bearish movement is more likely as trading continues to center more around the lower boundary of this range. Here's another strong short-term drop onto an intersection, but given the broader context, movement is mostly flat rather than immediately reversing back up. As the downtrend gradually accelerates, look at this intersection. There is close but no direct contact with it, yet the candles at that area are also fairly neutral to bearish. Unsurprisingly, the next significant halt to the drop takes place when there's contact with the next circle, which is also unsurprisingly in line with a past significant level.